Hey everyone, welcome back to Fiscal Voyage. It's Felix again, and today's video we're going to talk about my most recent dividend stock purchase. And we're going to go over into my interactive broker account, and you can see here I bought 14 shares of GPC at $138.37, about 1940 bucks with a dollar fee. And reason why I bought shares of this company, you can see here first off, if we remove the price on the chart on fast graph, you can see here the company has been very consistent. They have some down years. For example, here in 2009 and 2008, it dropped 2% in 2008 and 14% in 2009. And then for the most part, it had nice double-digit earnings growth. 2016 had a negative 1%, but then a nice year in 2018, and then in COVID year 2020, it had a decrease of 7%. But then the past few years, it just exploded: 31%, 21%, and 12% for 2021, 2022, and 2023. And you can see here, estimates are expecting 6% growth for 2024, 9% in 25, and 8% in 26. So, it has some down years, but this very small percentage wise, but it's very consistent grower. And you can see we put price back in the charts. This stock, for the most part, never gets under a 15 multiple. You can see here, only time it was under 15 multiple, it was in the Great Recession in 0809, where it was great buying opportunity there. It hit 15 sometimes here in 2011, 2012, but then for the most part, it's been not necessarily overvalued, but highly valued, over fair value, slightly over fair value. This would be overvalued in my opinion. This is more or less fairly valued around the 17, 18 multiple. And then again here in 2022, it had a 22 PE multiple, but now we're getting it at under 15 multiple at 14.4 blended PE, and the earnings yield of almost 7%, which is real good, and a 2.9% dividend yield, which is good as well. It is a triple B credit rating, which is good. The long-term debt to cap ratio of 43 is good. So you can see here, this is why I like and why I bought shares of this company. There's an additional shares lot. It basically was at my cost basis, so I was like, oh, it's a great opportunity to add more shares, because I bought way back here in 23. I bought shares around here, and then it had a nice run up, but then it came back down, the past few weeks. So I decided, you know what, it'll be a good opportunity to buy more shares at my cost basis. Now, if it's to go back down to the 127, 120, I will be buying more shares. But you can see here, if we shorten this time frame, if the company were to revert back to a normal multiple of 18.7, you can see here we can have a 22% annual rate of return for the next few years. So I like that a lot. We go back to forecasting. Fast growth doesn't have long-term growth, but if we go to some estimates, you can see here analysts are expecting around a 8% annual growth rate for the next few years. So you can see here, if it stays at a 15 multiple, we get a nice earnings annual return around 12.7 to 13% total annual rate of return for the next few years. So I like that a lot. And if we go to the analyst scorecard, you can see here they're pretty accurate with their estimates, so that's good. I like that a lot. So there's very predictable company to invest in. Another thing I like to look at is the Morningstar reports and CFRA reports. So we go to Morningstar. So Morningstar gives us a $150 fair value estimate. This report is from April, so it's not accurate here, but the estimate is still accurate. So if the price right now is at, what is it right now, 137, you can see here how it's undervalued based on the fast graph. This is probably a 4-star stock at the current price. Another thing I like here, we go down here to some estimates on Morningstar. Let me zoom in for you guys. You can see here revenue is expected to continue to grow around 3% to 3.5% for the next few years. Net income also consistent, 5.8, 5.7 for the next few years. This is what I like here. Earnings share is expected to continue to grow, 9.87, 10.34, and 10.92 for 2026, and dividends expected to continue to increase. So that's why I like that a lot. And then you can see here, price to sell currently is at 0.8, which is very low. price to sell. Normally you see companies that's undervalued. Anything under 2 price to sell is and under is good. We're getting this under 1, so that's real good price to sell ratio. Another thing I like to look at is CFRA. If we go to the report on CFRA, you can see here 3-year projected earnings expected to be at 9% earnings growth for the next few years, as you can saw also on Fast Graph, and it has a quality ranking of A-, which is good. It has a $180 price target, and they recommended a 4-star buy rating. And if we go to the fair value, they have a fair value of 151, so it's pretty much in line with Morningstar, which was 150. So you can see here, this is why I bought more shares of this company, General Park Company. So I like it a lot. And then also, if we go to the charts, if we go here to the monthly chart, you can see here this stock for the most part follows the 50 monthly average. Of course, this was COVID period right over here, so it went down to the 200 monthly average. But for the most part, you can see here 200 to the 50, the 50, the 50, the 50 here, and it bounced here. This is where I kind of picked up my first lot. It bounced here in the 50, and then it bounced. It looks like it's gonna bounce here again, also around the 50. So that's why I bought shares. Now, obviously, it could go down, and my next level of buying more shares will be around here, the 120, because I like this area for support. If we draw this kind of like support area range, so from the 120 to the 115 area, it'll be a good bounce area for this stock. It's kind of look like a head and shoulder actually. So we'll see what happens. You can see here's the left shoulder, the head, and the right shoulder. So we could see it, it could possibly crash down to the 100, but if it gets to around this 120 area, I will be buying more shares, because we also have this here. This is pretty good support as well. You can see here from here to there, is a good support area. This whole area is a good support here from 120 to 115. Great support area. So that's why I would buy more shares if it gets lower than my current cost basis of 137. So 120 to 115, I will be buying more shares. But the reason why I bought shares now is because it's at the 50 moving average on the monthly chart. So it pretty much follows that. You can see it here. Over here was fighting it a little bit. Then the 08-09 crash. But then ever since, it was riding the 13 moving average, but then bounced here, and then COVID crashed. But then it bounced, you see how it was going to come down here, and it respected the 50. So it's respecting it now, and hopefully respects it again. But if not, it gets down here, I will be buying more shares. So that's why I bought shares of General Parts Company. Great company, solid company. I really like it. You can see here, earnings expected to continue to grow. And, hopefully it will revert back to a normal multiple of 18. I would like to buy more shares. Hopefully, it gets to around the 120 to buy more shares, and then that should give me a full position. So, let me know in the comments what stocks you guys been buying this week, or what's catching your eye this week. I like, interacting with you guys to find out new ideas and things like that. So make sure in the comment, let me know what stocks you're buying. And also, if you're new to the channel, make sure to hit that subscribe button. And if you like the video, hit that like button. So I'll see you guys on the next one.